Well, good afternoon, good morning, good evening, wherever you are. We have people registered for this event throughout the world. My name is Tom Jenkins. My job is to welcome you to this webinar on recent changes in the position of the German Finance Ministry as the application of the tour operators margin scheme. Those of you who know the tour operators margin scheme will know that it is a fiendishly complex and difficult simplification of tax law. And if that sounds a contradiction, then you are following it quite clearly. In fact, a good way of knowing if you're understanding what is about to unfold is if you are starting to feel a little lost, because this shows that you are actually following proceedings quite carefully. But in all seriousness, the impact that indirect taxation has on tourism is genuinely profound. And we've noticed, for example, that large proportions of the European inbound industry tend to be based outside Europe precisely because of the impact of TOMs. Anyway, the main purpose of my introduction is not to tell you what's about to happen, because I have two really qualified people here to discuss it for you. I'm absolutely delighted to welcome David Bennett of Elman Wall Bennett, who is one of the leading VAT exponents in Europe, particularly when it comes to the application of VAT in tourism, and his colleague Dr. Volker Jorksik, who is from Germany. He is from the TTL Tax Consultancy in Cologne, and these two people really know all there is to know about the tour operators margin scheme, Article 306 of the VAT Directive. Formerly, for those people who've been following this for 20 years, will know that it used to be called Article 26 of the VAT Directive, and things are starting to hot up. It's becoming interesting, David. Do you want to start discussing how interesting it is?
Yeah, very interesting. Thank you, Tom. Yeah, look, good afternoon, everybody. I'm just going to say a few introductory comments, then I'll hand over to Volker, who will explain the nature of the German rules. That's what you've all come to hear. But we will, later on, also consider the wider position in other member states. Now, inevitably, unfortunately, whatever the starting point is Brexit, we need to appreciate that VAT is an EU tax, and UK rules were mostly derived from binding EU law. Most of this law has simply been transferred to UK domestic law, particularly for services, but there are some exceptions, and one of these is TOMs. Now, Tom mentioned that TOMs is a simplification, and indeed it is. I know it often feels as though it isn't, but as the next hour or so may demonstrate, the alternative can be considerably worse. So TOMs is a simplification. It's designed to reduce compliance for EU travel suppliers selling EU travel. But the defect really, I think, in the EU VAT Directive, Article 306, as Tom just reminded us, is that it's ambiguous, it's unhelpful when considering the status of third country travel suppliers. It does make it clear that EU established suppliers pay VAT in their home member state, but it doesn't say how third country suppliers fit into this regime, or indeed whether they're within the regime at all. Germany has just given its view on this point. That, of course, is the whole purpose of this webinar, and I will hand over to Volker in just a moment. But before I do so, I just wanted to very, very quickly deal with the new UK position, and also a few words on the ongoing EU TOMs consultation. On the UK position, we still have TOMs, but it's vital to remember that this is now a new UK version of TOMs. It is not the EU version. It provides none of the simplification protection that the EU scheme was designed to achieve. But it does still apply VAT on the margin, and the rules of the old UK version of the EU scheme still largely apply, but with one crucial difference, which I'm sure most of you at least are aware. The margin in the UK is now only subject to UK VAT when it is earned on travel within the EU. The margin on travel in the rest of the world, from a UK perspective, is now zero rated. And I would just mention that this was debated in Parliament back in 2019. And in particular, the Treasury Minister was asked about the possibility that UK tour operators would be required to register in other member states. The government's answer was, well, we appreciate it's a possibility. We hope it won't happen, but the measures that we are taking, i.e. only to tax UK travel, at least mean if it does happen, that UK tour operators will only have to pay VAT once. So that's a bit of background on the UK position, and even quicker on the Tom's consultation. Many of you will be aware that there was a public consultation organised by the European Commission last year to look at the effects of Tom. Some of you, I'm sure, contributed to that consultation. I just wanted to mention that the results published in summary form roughly a month ago made it clear that the level playing field, the distortion of competition, however you want to phrase it, caused by the non-taxation of third country tour operators is a big issue. Around about 80%, if I remember correctly, of respondents agreed or strongly agreed with the idea that the practical non-taxation of third country tour operators caused a distortion. So we will talk about the uncertainty of EU law in this area, but what has been quite clear until now is that in practice, third country tour operators very rarely paid VAT in the EU. I will hand over to Volker now, who will take us through the announcement very recently by the German authorities, which seeks to achieve some clarity in this area. Volker, over to you.
Volker, if I may, David, just so that I've got it straight in my head what you've just told us. Effectively, the situation is that obviously the UK has left the European Union. I imagine that is not news to anyone. And as a result of the fact that the UK has left the Union, the UK has naturally introduced its own tour operators margin scheme legislation because it's no longer in the EU, and EU taxation laws don't apply. And in doing so, they've introduced something that looks very similar to the tour operators margin scheme, but it only really applies to UK operators, and it only really applies to UK holidays, if I'm right in saying that.
Yes, absolutely. And only to B2c UK holidays as well. But the crucial point is it is not the EU scheme, and that makes us vulnerable to the positions that the individual member states want to take about travel organised by third country suppliers.
And what you also said is that there was a consultation with all the units within the European Union on what concerned them about the application of the tour operators margin scheme, and 80% of the people who they consulted said that the fact that third country operators are not paying VAT on their margin or on their holidays is a matter of concern.
Yeah,
and
absolutely.
now, the moment the UK becomes a third country, then that means that the subject is now on the agenda. And I now hand over to Volker.
Yeah, thanks a lot. So my job now is to illuminate a little bit the German VAT and TOM situation with regard to non-EU based tour operators. And the first question we had is, what does the guidance say? And if you have a look, this is what the guidance says. It's more or less the highlighted sentence here below, which in German, I'll translate it for our English friends, says if an tour operator who is not domiciled in EU or runs a permanent establishment is selling travel, he is no longer in TOMS. At least it says he's no longer in section 25 of the German VAT code, which is the TOMS regulation following the Article 306 of the Vat Directive. Well, what does it mean? It's just one brief sentence, and it brings quite a lot of alterations to this. First of all non-EU based tour operators selling travel in Germany. Yeah, we're only talking about German travel packages or German overnight stays or German passenger transport or the like, because that is the only thing the Federal Finance Ministry can regulate on. As long as they sell these Germany travel, they are no longer in the TOMS scheme, but have to apply VAT according to the normal VAT regulations. This is done by a simple reinterpretation of the law. The German Tax Administration issued this letter on 29th of January. That's 1.5 weeks ago on Friday afternoon when I received this email. And I must say, I was a little bit astonished to receive it at this moment. I had heard last year in March, April, that something might go on, but well, there was no real information about this. And now receiving this with all the impact on non-EU tour operators, and even an impact for those in Germany or other EU member states that thought now would be the time to relocate to the UK, is quite significant. However, we have this circular letter now. We can talk later about whether Germany's tax administration is allowed to do this, whether they should have asked other EU member states if they could do it in view of the ongoing proceedings on EU level with regard to the TOMS consultation and the like. But in fact, they did something they could do. And what we have here is something. It's a new interpretation from the tax administration. It is not written law. Which makes a slight difference, basically, because we have not yet have a change in the German VAT code, which basically one would have expected. However, the German tax administration did something which is, well, at least possible. And if you have a look into the German regulation, this article, this section 25, you will not find a word about whether this rule should be applied to EU tour operators only. This section 25, the relevant regulation in our VAT code, just describes the parties as the entrepreneur, the taxable person. So there is no distinction in there. So we have basically, and this is what we have since 1980. So for more than 4 decades in Germany, we applied the margin scheme, the TOMS, on all tour operators worldwide. This was the common understanding. I guess this was the common understanding in every member state until some years ago in 2014, had been a discussion within the VAT committee on EU level, where the member states simply said, well, but it's a good idea to apply this specific scheme to those tour operators that are domiciled, that are established in the EU only. And this, I guess that is my impression. And this idea is what the Federal Finance Ministry took up, looked up the relevant provision in Article 307, where we have at least a link between the special scheme and EU-based tour operators, and reinterpreted everything. And as it is their style, they simply ruled something without giving any explanation on anything. Simply they said, this is what has to be applied from the 1st of January 2021. And that is the situation in what we are, and that is what this guidance basically says. If we simply accept it, and that is now at the moment the German way, and as far as we see and as far as we know, Germany is the first country to apply TOMS to EU-based tour operators only. If we take this into consideration, we do have different different impacts on the B2C side and on the B2B side. I will start with the B2C travel, how it will be affected. Basically, we are out of TOMs, meaning that the tour operators is not obliged to tax a margin, but he is obliged to tax the complete Germany travel turnover. So if, say, a tour operator who is domiciled in the UK sells a round trip in Germany, including accommodation, local passenger transport, restaurant services, tickets, and all the like, he may sell it at a certain price. The price is, say, $500, and these 500, they form the tax base that has to be taxed according to the included different travel supplies. So what we have to do is we have to split up a travel package into its components, into its main supplies, which are accommodation, passenger transport, tickets, restaurant services, allocate the relevant price to each supply, and then tax it according to the applicable VAT rate, which is basically 19% and 7% on accommodation. And of course, we do have some alterations with reduced VAT rates in view of Corona, but that's something I think we can leave out at the moment. So we are not talking about taxing a margin in Germany, but taxing the full selling price. On the other hand, normal VAT regulations include the possibility to recover input VAT, which in practice, or in theory, in theory would mean basically nothing more is taxed as the margin that is generated for Germany travel. Because if you can deduct input VAT and pay output VAT, well, then in fact your margin, your markup, your add value is taxed. In Germany, of course, the tour operators have to register and pay and declare all this. But what I see as one of the main pitfalls of this in practice. Now, you know, I'm now advising the travel trade for over 20 years, like David. And what we have never seen when tour operators buy travel supplies is proper invoices showing input VAT that could be recovered and the tax administration accepting such invoices. So this will be a real huge challenge. And I assume that normally the invoices are not correct, and trying to get proper VAT invoices, that will be a challenge. You should be able to receive proper invoices when you buy directly by each service provider. So if you buy in a hotel, a German hotel, the hotel will send you a proper invoice. If you use a coach transport directly aboard, then you should receive a proper invoice. We will have definitely no input VAT invoices if you acquire something via somebody who is in between, like say a wholesaler, an incoming agency, or something like that. If you ever acquire travel supplies in Germany via a mediated person, not somebody who's acting as an agent, but who is in the merchant model, selling and buying his own name and who's in TOMs. These TOMs invoices are gross invoices not showing any input VAT that could be recovered. So that will be an issue where all those non-EU based tour operators have to do some kind of recalculation of their margins, have to identify the relevant travel supplies and the like. Yeah? The way out of this, I think this is a huge disaster for every non-EU based tour operator, at least with regard to German travel. The way out is to sell via an EU affiliate or a new permanent establishment. It must not be domiciled in Germany. Somewhere in the EU would be sufficient. Simply following the rule that whenever you pay TOMS VAT in any of the EU member states, well, that would be sufficient. Then everything is taxed, and we create some kind of playing level field between the EU-based tour operators and those abroad. And the German tax administration knows this, the other tax administrations in Europe know this, and even the EU Commission knows this. This was an ancient issue of the travel associations, always claiming that EU-based and non-EU-based tour operators should be treated in the same way. David will remember, Tom will remember that we lobbied for this via ETOA, via ECTA, via lots of different associations in the past. We still do, and this is now the first reaction here within all of Europe after, again, decades of negotiations on EU level, what the future of travel taxation might be. So this is what we see as impacts on the side of the B2C providers. Sorry. If we then switch over to the B2b sector, I simply call it the MICE sector, meetings, incentives, events. You will know we have now 3 decisions of the European Court of Justice, the ECJ.
Sorry, can I just stop you there? Because I just need to summarize in my own head. I am very, very slow at following these things. And I just want to make it clear. What the German tax authorities have said is that if you are not in the European Union, if your company is not in the European Union, and you are selling German vacations, you are expected to register an account for VAT in Germany.
Exactly. Yeah.
And assuming that this is happening, and if you register an account for German VAT, you will obviously try to reclaim all your input VAT from your from the components of your holiday, your hotel, your transport company, the other components that there are, and then you would charge VAT on the price charged to the consumer. So if you're a B2C operator in, say, North America, you sell a German holiday for $100, you would be expected really to be charging, if it's 19%, $1,190 and redeem $190 to the German tax authorities. That's what it says on paper.
Yeah.
And you've got 1 or 2 difficulties of reclaiming your input VAT if one of the components of this package is a B2B wholesale operator who, by law, has to account for VAT using TOMS. And if they use TOMS, they can't make a declaration of how much tax they spent, so that tax is effectively non-recoverable. So you may be being charged, having to levy $190 worth of tax, and a significant portion of your input tax is non-recoverable. So you're saying this is one of the big problems. You then went on, I'm just recapping very quickly, to say that one way around this potentially might be to use an EU operator who's not based in Germany, because if
somewhere in Germany.
Sorry?
Just somewhere in Europe. Sorry.
Somewhere in Europe, but not in Germany. And if you were to use one, say, in Austria, then they could turn around to the German tax authorities, say, I'm a EU operator and I'm accounting for this under the tour operator's margin scheme, and they then would just send the bill to the person in the third country. Does not the German tax authority, it's just my question springing from this, does the German tax authority not say anybody selling a German holiday in the EU in a third country has to account for VAT outside of TOMS? And the fact that they've gone via an Austrian or a Maltese operator doesn't remove that obligation.
As long as the one selling the B2C travel is established within the EU, whether it's Austria, France, Spain, anywhere, and then they are in TOMS, just according to the rules and according to the decisions of the ECJ. And if you're in TOMS, everything is fine. And it's only those that are outside of TOMS that fall under the normal VAT regime. Okay,
but I'm just saying that very few Japanese or American operators have B2C bases based within Europe. They just don't. They may have wholesale bases based in Europe, but those wholesale bases are, and they may account for tax under TOMS as they're obliged to, but they then forward the bill on to someone based in Japan.
Mm-hmm.
And in such the circumstances, are you telling me that the because it's gone through an Austrian operator, we'll say Austrian notionally, because it's gone through an Austrian operator, the German tax authorities will ignore it? Or is it simply going to be, they're going to say, hang on, we've got a Japanese operator here, we've never heard of them, there's a bus parked in the Schwarzwald, and we think there's a margin payable on this?
Mm-hmm. So just to make it, not to make it too complicated, if we have German travel sold via an Austrian tour operator to a Japanese tour operator who on-sells it B2C, then the segment from the Austrian operator to the Japanese is subject to TOM, and from the Japanese tour operator to his B2C clients is subject to normal VAT regulation. So it may sound ridiculous, but Germany would expect the Japanese tour operator to register and pay VAT for the Germany travel that is sold from a Japanese tour operator to a Japanese client, to a US client, to any client in the world, because the nationality of the client doesn't count. It's a question whether it's a non-EU based tour operator selling German travel.
Right. Okay. I just want to make that clear. So that the fact that you're using somebody who accounts for tax in TOMs, if they're a wholesaler, doesn't remove you from your obligation to register and pay tax in Germany as it stands. Okay.
Correct.
Right. I will now let you carry on with your point about mice, which is quite important.
Happy to interrupt.
Incidentally, I ought to let everybody watching, and we have nearly 250 people watching at the moment, that they're welcome to put questions down, and many of you are putting questions in, and I will come to the questions when we've finished the discussion part. Volker, sorry I interrupted you. Over to you.
No, I'm fine. I'll hurry up so we have more time for the questions. Okay, back to the B2B issue. When you all know that we have ECJ decisions that say the my sector is in TOMs, and if we look again into Germany, we had a change in the law, so that effective 19th December 2019, and it's the 19th December, it is not end of the year, all mice business, all these events that are sold in the merchant model need to be TOMs. They are out of the normal VAT regulations, so you lose input VAT on that and the like. With this new letter from end of January, we achieved the following. It is relevant for Germany as a country where you sell mice, that the mice is out of TOMs if you're a non-EU based mice operator selling German mice services. So when we simply have a look into the UK, once again, this is an upside, and so far, and even for wherever you are established in the world. If you, for instance, organize a big fair in Frankfurt for whatever reason and sell this to a B2B client, if your mice agency is domiciled in Germany or elsewhere in Europe, this is in TOMs. So this is the gross cost. You have 10 million plus 19 as VAT that needs to be paid and cannot be recovered. If you would sell this event, this fair, via a UK-based mice agency, under the merchant model, you could invoice on a net basis. We'd have to look whether and what part of it would be subject to reverse charge and which VAT need to be shown, but at least VAT would be recoverable. And this is a big upside of these, because the B2B business is neutral again. And if you have a look to this lovely copy mark where it says simply TOMS it, and then read here below, but opt out B2B. That is what we all time lobbied for. And this is the first, so this is the first country in Germany where you are allowed to sell B2B mice events on a net basis again, but only if you are not domiciled in the EU. And that is the effect we are facing at the moment. I would say the opportunities that we face is for the business travel and for the MICE industry. Business travel also, I know from my experience that a lot of business and MICE agencies changed their business model to some kind of agency. I say some kind because real agency is, well, it's complicated. And there is now a chance to turn back to the merchant model again, which, as far as I have learned, is much more interesting in terms of simply being the merchant of records, creating the price, and being able to send out own invoices. Yeah? And that is the situation in what we are. B2C, you're faced with a registration issue. B2B, neutrality is back. Yeah, that is in very short words what we're facing right now.
Just very quickly, are you going on to talk about the likely actions of the tax authorities, Volker?
Happy to do so. Just wanted to see whether there's any questions.
We've got loads of questions, but I think we'll come to them at the end of your input now and then David's input. I'm here just to clarify anything you said. I think the last point, if I understood rightly, was that for B2B transactions in the MICE area, you are now in a position not having to be in TOMS, and therefore your input tax looks like it's fully reclaimable. Yeah. So there are some upsides, you're saying.
Yeah.
Excellent. Right. Well, I'll let you carry on. Don't worry.
Okay. Maybe some little intermezzo with regard to the question: is the Federal Finance Ministry allowed to do what they do? And the simple answer on this is yes. Yes, they are allowed to interpret the German law according to the regulations of the Vat Directive. And nobody at the moment knows whether the ECJ, if ever this question will be brought up to the fiscal court and then to the European Court of Justice, will hold this or not. However, one can try to figure out what is quite likely or what might be likely. And my guess is that this way of interpretation of the TOMS rules, which follows what most of the EU member states in 2014 said is the right interpretation, should be quite easy for the ECJ to be held, saying, well, that's correct, and that's an easy way to make money for the EU. And if you have the B2B segment neutral again, that's also fine, because we go for that. So that's my personal guess. We'll see. Who wants to bet against me? I already have a bet running for some bottles of beer, but I will know this in some 2, 3, or 4 years if there is any court case ever. And if you're looking around in Europe, Germany is the first state to come up with this. As far as I know, this action has not been checked with any other member states. Even I think the EU Commission was not really informed about that. However, it's an internal issue of Germany. They can do this. They did it, and we'll have to live with it. And I remember from quite a lot of calls in the past 10 days, especially that some people asked, but how the hell would Germany be able to enforce this? Well, they will find their way. Yeah, they will find their way. And what we all know at the moment is, well, this is what the Federal Finance Ministry says. This is what the tax administration will apply. I have no idea whether they start surfing through the internet, identifying all third country-based tour operators with Germany trouble, and then sending a friendly letter and asking them to register. I know that they keep on sending letters when they have started it. And the question at the end is somehow, do you want to be compliant or not? Because unless the ECJ says this is completely nonsense, what Germany did, well, it is at least it's their position, and we have to follow these rules. Yeah, we do have an additional discussion in Germany at the moment whether we really need a change in the VAT code, in the German VAT code. Just to be on the safe side, the Section 25 that should be also limited via the legislative proceedings. Well, from my perspective, maybe we'll see this in due course of the year. I guess this is nothing more than some kind of cosmetic, because the interpretation of VAT regulations in Europe, the interpretation of domestic law must always follow the ideas of the VAT guideline. And if domestic law is too wide, and the guideline simply says, well, at least you can read it in Article 307, this specific regulation should only be applied to those that are established within the EU because it's EU law and nothing else. Well, then that's it, yeah. I definitely find it hard to identify some counter arguments. And another point was, but since more than 40 years, non-EU based tour operators were not taxed. And we said, yes, lucky you. They could have taken this point of view earlier. They could have started with it in 2014. When they could have started much earlier, but nobody simply did it. And now we have a starting point, beginning of 2021, where basically there is very, very few travel only. So it's quite fair to address and announce something like this at the moment. So everybody is in a position to, to check his figures and to change everything. This is just the overall legal issue in the background. We'll see whether there will be a court case and whether the ECJ will have the opportunity to decide in, say, 2, 3, or 4 years, however it takes. At the moment, it's only Germany following this approach. If there are many more member states, the likelihood that the ECJ may think, if everybody follows the German way and we create more Tom's tax income, well, could be the acceptable way forward. We have, with regard to technique, if we are in the normal VAT regulations, Germany applies quite different reverse charge rules than other countries. We may come back to this if there are specific questions. The question of the tax point, I think basically is, so when do these travel need to be taxed? Basically, the tax point is when the journey is ended. Usually in German practice, just because it's more pragmatic, we take the departure date to tax everything. And this is something that makes it relevant even nowadays, and not in 4, 5, 6, 7, 8, 10 months, is whenever a tour operator receives an installment payment, these have to be taxed under TOMS as well as under the normal VAT regulations. And assuming you have a travel in Germany in 2022, say a travel package with Oberammergau, and you started to receiving the first payments from your B2C customers, as the moment you receive money, you have to tax it. Yeah? So that is just a brief overview of what needs to be taken into consideration. When it comes to B2B, it's always a little bit more complex, as we have to split the relevant travel supplies into those that have to be taxed while showing German VAT, for instance, local passenger transport, except river cruise, and others that are subject to reverse charge, for instance, accommodation, restaurant services, culture, and all the like. But that would need some more in-depth analysis of each case. Yeah? So we do have now, via this regulation of the Federal Finance Ministry, a new situation for B2C. Really challenging for those that want to go with it, and for the B2B segment, absolutely interesting with regard to neutrality. And that is, well, at least, Tom, I think that's enough for the time being, and we can hand over to David for further implications, and then come to the questions.
Thank you very much. I think, yes, let's hand over to David. David, you're on mute.
Okay. Good. Hopefully you can hear me again. Okay, thank you, Volker. Just before we finish and go on to questions, I thought it would be useful just to say a bit more background really on the position in other member states. I guess quite a lot of you are looking at this and saying, well, you know, Germany is an issue for us, but the problem will be far worse if other member states follow the lead of Germany. I think it's fair to say that the status really of third country tour operators has been an issue for 20 or so years now, if not longer. Way back in 2002, the Commission put forward reform proposals, which included a measure to attempt to create a level playing field between EU and third country tour operators. It was a flawed piece of draft legislation. It was never accepted and it was withdrawn. But the important point is that it attempted to tackle this issue at that time. Move forward to 2014, and in the VAT committee, this is the point that Volker covered in his presentation. The member states addressed this question, and by a large majority, they thought that the correct position technically is essentially identical to the position that Germany has just adopted within the last 10 days or so, i.e. third country tour operators are not covered by TOMs, and therefore by implication, normal VAT applies, which can be expected in any member state to mean the local payment of VAT on the basis that Volker described for Germany. But at the time, it had the feel of a very much theoretical issue without perhaps a great deal of practical application. That was 2014. 2 years later, of course, it became a much bigger issue when the member states were facing up to the prospect that they would have a fairly large country on their doorstep, gaining potentially a competitive advantage in this area. I attended the Fiscalis meeting organised by Germany and the Commission in 2018. And without going into detail, it was very clear from a lot of the comments made by member states' delegations that this was a much bigger issue for them because of Brexit. And I've mentioned already the TOMS consultation of last year, which again highlighted this area. So I think it's quite clear that the impetus at an EU level is very much to looking for a solution. There may well be new legislation in 3, 4, 5 years' time that sorts this problem out once and for all, but that leaves a difficult period of 3 or 4 years, let's say, while we still have the uncertainty as to the meaning of the directive. Germany has gone one way. My view, I think it's the same as Volker, is that other member states are very likely to follow, not necessarily all of them, but many of them will. Germany, of course, is an extremely influential view, and I suspect that other member states will look at this as a means, not necessarily of just raising revenue, but of discouraging their own tour operators from relocating. The 2014 initiative largely sprang out of demands from Croatia, which had just joined the EU at the time, for something to be done because their newly TOMSed tour operators were finding it competitively difficult against Serbian, etc., tour operators on their doorstep who were not paying any VAT. So we might say that Croatia would follow Germany on this. I believe Austria is very likely to as well. Anyway, in a nutshell, it seems highly likely that others will. Each member state will have its own rules. Volker discussed the reverse charge. We should not expect other member states to apply the reverse charge for B2B in the same way that Germany does. We do, I would just add, from the 1st of July this year, have a new EU directive coming into force, into effect, which will extend the existing one-stop shop. This is another simplification. It allows businesses, both EU and non-EU, at the moment on a narrow range of services, effectively to account for the VAT on services owed in multiple member states through a portal operated in their home member state. So you would only make one tax declaration. You wouldn't deal directly with the tax authorities in all of the affected member states. From the 1st of July, that will be extended to travel services. So UK and other third country tour operators from the 1st of July will have the option of making their declaration for German VAT on B2C only. The one-stop shop is solely for B2C transactions. For Germany and potentially other member states through the non-union one-stop shop, which would require a VAT, a one-stop shop registration in a chosen member state, Ireland, let's say, for argument's sake. And then the German, Croatian, Austrian, Dutch, whatever it might be, VAT on B2C could be declared to Ireland through the OSS. Now, whether that's a good thing or not will depend on individual circumstances, but it does at least introduce a choice in the means by which VAT outside of TOMS on B2C supplies only might be reported. It cannot be used for B2B. And my very last point, the Brexit trade deal contains some very detailed rules on VAT mutual assistance to replace the EU mutual assistance rules. So those rules would permit Germany and other member states potentially to request HMRC to collect EU VAT on their behalf. So that would make the enforcement of liabilities in Germany, etc., easier perhaps, more immediate as far as UK third country suppliers are concerned. It doesn't apply, of course, to third country tour operators in the US. Okay, that's it, I think, as far as the prepared part of the presentation is concerned. But Tom, we have various questions, I believe.
Well, we do have some questions, one of which is what I'm going to be asking immediately, and it's to Volker. David, I'm just going to mute you very quickly. There's a bit of feedback there. Volker, the German tax authority said that this is going to apply really from the 1st of January this year, from the 1st of January 2021. Of course, we've got a lot of people there who have pre-bought things like Oberammergau packages, which were supposed to operate in 2020, and they're still sitting on them. Will they have to pay tax on these Oberammergau packages? Because they're going to take place, obviously, in 2022. You're mute. You're...
Now?
Now we've got you, yeah.
Okay, yeah. So with Oberammergau, for instance, the question is, VAT occurs when you sell the package, not when you acquire. If you have acquired the package, you may be, well, that's an interesting question. If you have acquired it in 2020 and you have paid already and you want to recover input VAT, well, should in principle be possible, because the letter of end of January says, well, you have to apply this from 2021. And I have to think about this once, because if we are trying to receive input VAT from 2020, maybe the tax administration also requests you to pay a VAT for Germany travel that has been taken place in 2020. I have not thought about it, but sounds somehow logic. Yeah, we'll have to check even with the Federal Finance Ministry how they treat this.
I think the broader question is, if you sold a product which was due to take place in 2020 and will now take place in 2021, will you have to pay tax on that? Is my question. Because there are lots of people who've pre-sold and pre-priced packages that are going to be that have already been sold in Germany and will be sold in Germany at the wrong price. I mean, there is no tax embodied in the price at all.
Yeah, there will be German tax on it, definitely. Even if it was pre-sold in 2015 for 2020 and then 2022, the travel supply takes place in 2022 with regard to Oberammergau, and that is the relevant point of taxation if somebody would have forgotten to tax even the prepayments. Yeah. And that this is an issue. I already discussed this with one of my clients and said and told him, well, there must be, if there's the chance of recalculating the prices, if there is an additional, say, 19% on the selling price, that may kill your complete margin. Yeah, and it will be the non-EU based tour operator to show to the German tax office which part of the price is subject to 7%, the reduced rate, and which price is subject to the normal VAT rate. With regard to Oberammergau, there is one specific, the ticket, I think, it is VAT exempt. And through a B2b supply chain, we have a domestic court decision from 2018 that says, well, this tax exemption goes through the B2b supply chain. So the ticket itself should be VAT exempt. Accommodation 7%, the rest then 19%. That is what I would expect. Yeah.
Okay, but I mean, what effectively you're saying is that whilst there's going to be a mixture of input and thus output tax levels, some will be exempt, some will attract 7%, some will attract 19%.
Yeah.
If there's a package being sold in, which is pure German package, and it's being sold in North America, and it's being sold for $1,000 net of VAT, the German tax authorities will be looking for something in the region of 90% VAT on top of that. So they're going to be looking for 1,190 or what?
Well, if they will take just the selling price and then identify the VAT that is included. If the package was sold for 1,000, they would expect, if nobody can prove that there is some reduced VAT rate in it, 19% in it, that is roughly 160, 158 euros of VAT within this 1,000 euros. Or you sell 1,000 net and add 190 on top. Yeah.
Exactly. And no one, for what it's worth, has got a 19% net margin that they've got to do that with. It doesn't exist.
Presumably, yes. Yeah. Mm.
I think just before we get on to the questions, I just want to stress to everyone listening the extraordinary implications of what the German tax authorities have just delivered. They are levying a tax on the value add of value add they're levying a tax on value add on taxes that take place outside the EU. Is what I'm trying to say. You're selling your German holiday, and all the expenses you incur in selling that holiday, the marketing costs, the commission, the sales, the reservation centers, the website, all that, the brochures, all that now have tax on those costs, and that tax on that cost is being levied as if those costs were being incurred in the EU, even though those costs are taking place, say, in the United States. Secondly, it's imposing a tax on exports that's levied on the process of exporting it. It's extraordinary. Most people try to encourage exports by making it tax-free. This actually goes around saying these taxes are going to be imposed on exports, and we're going to impose it on the process of exporting these packages. And thirdly, and this is what's breathtaking, it is in effect, well, it's not in effect, it is an actual attempt to collect a sales tax in third countries. And Europe has had a long but not very illustrious history of trying to collect sales tax in North America. The last time it was attempted was about 250 years ago. A lot of tea ended up in Boston Harbor. So it's extraordinary in what the attempt is. It's also extraordinarily complex, and we don't know how they're going to go around forcing the registration of Chinese operators who are buying FIT hotel packages off other Chinese operators who themselves may have bought them off a bed bank based in Japan. It's going to be a real exercise in forensic pursuit in countries which they've got no authority to do investigations in. Anyway, that's some of the implications. Let's get to the questions, gentlemen, if I may. Right. The first one we've got posed was simply a note that the German National Tourist Office, perhaps understandably, doesn't really want to be drawn on this because I don't think they've been consulted at the moment. But I think we partly answered it, but someone wants to know what German VAT rate would be applied to the margin. Is it the standard or reduced rates? How would you go about doing it?
The margin is taxed at a standard rate, but when we're talking about UK-based operators, we're not talking about margin taxation. We're talking about the taxation of each of the main travel supplies.
Yeah.
And most of these travel supplies are, again, taxed at the normal VAT rate, except accommodation with a reduced rate of 7%, and some specific tickets like Oberammergau, which are completely VAT exempt. You would have to identify case by case which is the right, which is the correct VAT rate. If you cannot prove towards the German tax authorities, if there was any, that's at least my view, that there is a travel supply included or a travel supply sold, which is not at the standard, is not taxed at the standard rate, they will simply ask for 19%.
I think just to so I understood you, effectively you build up the tax that you're imposing on the product based on what the components are. So if 80% of the costs that you're incurring are accommodation, then 80% of the tax that you're imposing will be at the reduced rate. Okay, that's fine.
Just give me a second, Tom. So it is of course interesting when you have such a package with reduced rates and with VAT exemptions that you say, okay, everything is for free and the whole price is only for the VAT exempt Oberammergau ticket. This will not be accepted. Yeah, we take a kind of cost ratio here in the German tax administration. That's how they simply do my estimation. They identify the relevant sales prices. Yeah, so we cannot really play with this, and we need to convince and prove how we identify the prices.
I think a lot of these questions you partially answered, but it's probably worth making it explicit. If I go to a wholesaler in Germany and buy through a wholesaler in Germany, am I going to avoid the problems incurred by this?
No, you will not.
I think no is the answer. It's the short answer.
No is the answer. Sorry, but you get, if you do that, you get a Tom's invoice from a local wholesaler. The same would apply if you go to any other wholesaler in Europe buying German travel. You get a gross invoice in Tom's, and then afterwards you would have to tax your whole selling price. No, that will not help.
Okay, the question is, what do you do when your tour package only includes a portion of German travel? For example, a tour that starts in the Netherlands and visits Germany, Austria, France, and Italy. How are you supposed to know what VAT is due for the German-only portion?
Well, what shall I say? It's quite easy. Well, it is definitely easy to find out the right tax rates. All of the German relevant tax law, the VAT guidance, and all this is published. It's all in German. Unfortunately, you'll find a lot of this translated on EU websites, so you can find it out. And if you then want to know how to identify the German portion of such a price, well, that's a pro rata part of the price, and it needs to be estimated according to whatever. Usually, we take a cost ratio of the components in Germany and the components outside of Germany.
Right, so you couldn't. It's going to be quite a pressing issue. This, I mean, if you turn around and if you, for instance, spent 2 nights in an extremely expensive hotel in Munich, and 3 nights in a budget hotel in Austria, you couldn't say, well, the VAT is due on 40% of the holiday.
Yeah.
Could you? Or because the cost may be 80%.
Yeah. I completely understand this. That's again a question of each case. Usually you can say it was 5 overnight stays, so 20% for each, or which is the more correct one, and which would I expect the German tax authorities to follow is, if they know the price, they will ask the price. They are able to question which hotel was it in Germany, which hotel was it in Austria, and if they see that, well, they simply then take the higher prices for Germany, and that would mean a higher portion of the whole sales price to be taxed at 7% at the reduced rates for the hotel in Munich.
Right. What is the ruling of a reselling an EU-based tour operator? I think you touched on this before. If the Japanese company resells the Austrian company's product to Japanese guests for a sales commission. Whoa. That's several questions in one, actually.
Yeah, I think so. That's a combination.
The Austrian company is buying German product and selling it to a Japanese client via a Japanese agency.
Yeah, if the tour operator is the Austrian, everything is fine. And if the Japanese in between is just an agent receiving a commission, well, that's agency, that's B2B, that's very, very, very ordinary. Selling is the word I'm just pointing to. An agent is never included in a sales line. Yeah, so an agent is the one to bring together 2 parties, not buying and selling, which is the most important issue. And so if the company in Japan is not a tour operator, is not somebody who's buying and selling, well, then everything is fine. If not, they are obliged to register.
Right, one person posed a wonderful question, which is there a turnover threshold for this?
Sorry?
Is there a turnover threshold for this?
No, you have to register for 1 cent in Germany.
Oh dear.
Not really. There is no threshold.
Okay. The next question is quite valid. There's an American offerer wanting to know how they go about registering for the German tax authority. They're based in North America. How do you do it? I mean, where do you go?
Well, you go to Finanzamt Bonn Innenstadt. You simply call them and tell them, I want to register, and they will send you the right forms. They would be really happy if you do so. I know quite a number of my US clients that were in touch with me some years ago, and they thought they should not have to be registered in Germany. And, well, I helped them to become compliant with regard to German reverse charge. That happened. Yeah, and better to know up front, just to identify, well, simply the VAT issues here in Germany. And I know that the tax office in Finanzamt Bonn Innenstadt is quite eager in doing their job. To be honest, I do not know whether the tax administration has already prepared a letter that is being spread to all the tax offices so that they can use the same letter for every tour operator worldwide. But well, they will do something. And I know that especially for my UK and my US clients, it's Finanzamt Bonn Innenstadt, and for the UK clients, Finanzamt Hannover Nord. They are used to this job, yeah, and they speak fluent English, and they will write you again, and well, yeah. Definitely enforcing something in the US is more complicated than in the UK will be. Yeah, but the question is if you want to sleep well at night or not.
They're going to come and get you in the night. Well, they might do.
Yeah.
They have form. I mean, we've had members. We had a coach operator in Australia who was approached by the German tax authorities with a photograph of their coach outside Cologne Cathedral. In fact, Volker, I think you probably took that photograph.
Photograph?
Yeah. Anyway, there's neither here nor there. They do like chasing people. There's no doubt about that. Now we've got. Does this just very quick for clarity? If you are a B2B and a leisure operator, not MICE, and you act as principal, not agent, can you reclaim the input VAT if you're outside the EU? Checking this 3 times. Factors are the key items, I think. That's basically, it seems very odd. If you're outside the EU, you're buying products in Germany, will you still be able to reclaim the VAT if you can do it? And the answer is yes, but you'll have to pay the output VAT.
Yeah.
Okay. Some simple questions. Does this apply to tour operators who are not in TOMs? I think the answer is yes. What happens? We've already answered. Sorry, there's so many questions flooding in. We've already answered the point that you need to prorata the component. So that part of the multi-country tour that's in Germany when you're calculating the tax. I think we're getting to the bottom of the well now. I think we've got a way to go on the question front. What are the rules for EU wholesale agents selling GB? Can they claim the VAT input? That's what
wholesalers in the EU.
Yeah, if there's someone selling if someone is in the EU and they're now selling the UK, can they reclaim input tax when selling the UK? David.
Yeah, yes, they can. So, just a word on the UK status of EU tour operators. HMRC have said that they will not, as a matter of policy, require non-UK tour operators selling destination UK when expecting to register for VAT. But there are many circumstances in which it is beneficial to do so. So, for example, Volker was talking about UK, another third country, MICE, and business travel agents registering in Germany. The exact opposite is true. A German or other EU, or any country indeed, organiser of UK events or business travel could register, recover the input tax, and issue a VAT invoice to the client, who in principle could then recover that VAT. We think, incidentally, that HMRC will agree to the same treatment for UK-based MICE operators as well. Specifically for UK inbound wholesale suppliers, yes, there are a number of such companies registered in the UK, all making what we used to call 8th Directive EU VAT refund claims. That will still all be possible. The rules are unchanged.
Okay. I think we answered it, but I'll just reiterate this, Volker. Will this impact Oberammergau passion play installments to be made or retrospective to payments already made to the Oberammergau people? So will this impact payments you've already made to Oberammergau? Volker, can you hear me?
No, well, now it's me again. Yeah. So if you already bought in packages from Oberammergau, you're able to claim input VAT for that.
Yeah, I know you can reclaim the input VAT. The question is, will you have to pay the output VAT on packages which you've already bought and already sold?
Yeah. Yeah.
You will have to. Okay, we've said that.
You have to. It's a kind of prepayment, so you're obliged to. Okay. That is just a question of what is the correct tax point. Yeah. At the latest in 2022, when Oberammergau takes place, they will need to be taxed. Yeah. But I would say if you receive the money earlier, you need to pay it earlier. But well, we do not have guidance on this yet, and I think the Federal Finance Ministry did not have this specific prepayment issue in mind when they issued this circular letter.
I don't think they've got a lot of things in mind when they issued this, but we'll see.
Yeah, maybe.
We've got merry hell breaking loose. So just to reiterate this point, is that someone is worried that they've got a US operator buying packages from a UK B2b supplier who's then on-selling it B2C in the USA. And I assume that the components of this are German products, so it will be something like an Oberammergau package, but it could be anything. They will still be caught in this procedure. Someone said, what action should we be taking right now? What an interesting question. It's a question I'm asking myself at the moment. I think watch this space. It's a short answer. We may have to write some letters to people. Oberammergau has been proposed again. I'm just looking through the questions. I've got what lobbying efforts are being organised to squash this ridiculous ruling, hopefully led by the German Tourist Office. All right, well, I hope the German Tourist Office, who may be listening, might have an opinion on that, but I dare say they don't wish to be drawn. The next question is, are these documentation forms only available in German? Are they going to be made available in all the languages of the people who need to pay this tax? So are they going to be available in Chinese and Japanese and Thai and Indonesian and Malaysian? And there's a lot of languages out there that they need to start doing these forms in.
Yeah, especially Mongolian.
Yeah, there's lots out there, yeah. It's a good question, that one. Well, I mean, there's a good one for the tax authorities. We'll see. And especially if there's no de minimis, there's a lot of investment in foreign languages for very small return, but we'll see.
Yeah.
Is 2 weeks in Germany to learn German is outside the scope? Is it only leisure, or is education captured in this?
If education is combined with leisure, well, everything is taxable then.
Okay. Everything that is not work is leisure, as far as everything that is not business is leisure, as far as the taxation authorities are concerned. Yeah, this is. If I don't bother with a reverse charge, you'd love this one. If I don't bother with a reverse charge procedure, and I mean, it's a very good question. I'm not being rude about the question. I pay VAT even if I'm outside the EU, so I'm going into Germany. I'm paying all the VAT on all the components. And I don't bother reclaiming any of this VAT at any point. Do I still have to register?
Yes.
Yes, because you've got to pay. You've got to pay the tax on the price charged to the consumer. Yeah. All right. Well, it was worth asking. If the only thing to do is to stop sales to Germany, that was posed by a German, by the look of it. But anyway, and someone's put in: does Germany want international tour operator leisure visitors, or is this a way of saying Germany only welcomes MICE clients? And are river cruises exempt? Is the question.
No, they're not exempt, but river cruise is a specificum which is still under reverse charge, whereas other land-related passenger transport is not subject to reverse charge. So if you sell coach or rail, you have to issue an invoice showing German VAT, either if you sell B2C or B2B. But if you sell river cruise B2B, this is still subject to reverse charge. It's just what it is. I don't make the laws. Hopefully I know how to apply them.
All right. Can the German VAT authorities confiscate a coach while traveling in Germany when they judge the tour operator not registered for German VAT?
If it's the coach of the tour operator, yes.
That's an interesting question. And if it's not the coach, because very rarely the coach is the coach of the tour operator. It would just be whatever unlucky German coach company had the wrong thing written on the side of the coach would be okay. Okay. I think last question. What is the anticipated filing requirements? Is it monthly, quarterly, or what?
Presumably monthly. Well, monthly, yeah. Yeah. Mm.
And just absolutely last question from me. The European Court of Justice ruling, of which you're only too familiar, said that all accounting for TOMs had to be on a transaction by transaction basis. This is not going to apply to this because this isn't in TOMs.
Exactly. This is in TOMs, and every transaction is taxed transaction by transaction basis under the normal VAT regulations. Yeah. And we're still not clear with regard to how this single margin approach, which shall be applied in Germany from 2022 on, will be applied or not. Tom, that's another issue. I'm not a fan of single margin. You see, we are lobbying for don't single the margin, global it. Which is the only thing that will work, and we'll have to see what happens with single margin taxation.
Okay, and just the last question, and then we really have to draw it to a close because we're overshooting our time limit here. How do non-EU tour operators proceed when they buy the services in Germany from a German incoming agency that is in TOMs and does not show VAT on its invoice?
Yeah. Well, they simply receive a gross invoice, have no input VAT, and have to account for VAT on the full selling price. So
you get no relief on the VAT whatsoever?
You have no input VAT relief. No, there is no VAT to be deducted. No.
So this is a savage blow to German wholesalers who are selling to non-EU clients, because these non-EU clients can get no VAT relief on their input.
Yeah.
All right.
For the German ones.
Okay, I think the short answers. I've got a feeling, ladies and gentlemen, this one's going to run and run. We're not going to hear the end of this one for a while. In fact, I can almost say that we will have another one of these, I think, within a month or so. Can I just end by thanking Volker, who has very kindly given us his time well into the evening in Cologne, and also David Bennett, who has been based down in frosty Sussex, and from me here in London. Thank the two panelists, thank the audience for being there, and thank you for everyone who's posed the questions. You will hear much more about this in due course. Thank you very much indeed. Bye-bye.
Thanks. Bye-bye. Enjoy the day.